Okay, good morning, everyone. I'm so glad that you guys are here. I am India Davis with India Davis Real Estate Team, and I am partnering with Selena Ward with Benchmark Mortgage. And we have done this class before, but we like to present it, a couple of times a year just to try to help inform as many buyers as we can, kind of about the process and answer any questions that people have regarding buying a home in Texas and what strategies kind of are coming up and what new things we might need to share and we're very open to questions, so please feel free to put something in the chat or stop us along the way. We're a small group, so we can certainly ask questions along the way. And so I'm going to start and I'm going to share a little bit of the realtor side of things about how the process works on my end. And then I will make Selena the host, and then she's going to share her screen and share a little bit on the mortgage lending side of things. All right, so we will go ahead and get started. Let's see here. Let me get to my screen. Okay, can everyone see my screen? Good. Okay. Perfect. So, um, the first thing that I always like to tell people in the process is who you work with truly does matter. We saw a huge influx, and Selena can kind of attest to this, but we saw a huge influx in the number of realtors kind of jumping into this career field, as well as the number of lenders jumping into this career field right around when the pandemic happened, because that was a very, the real estate market was booming and taking off, and things were really easy to sell at that point because there were so many people coming into Texas, and our market was just kind of wild. However, what we determined in that is that not everyone was apples to apples. So we do like to just make sure that, we always express that who you work with truly does matter. I pride myself on making sure that I am educated and that I'm staying on top of everything that is new, whether it's legal things or, market updates, strategies, different loan programs, different, ideas for getting an offer accepted, all those kinds of things. And I know that Selena does the same. And we're really big on education and collaboration and just making sure that we are truly bringing our best to all of our clients and making sure that we are professional and knowledgeable and not just kind of winging it. And there are some people out there that unfortunately are winging it, and it is not the best time to work with someone like that when you're, going through a home buying process where it's a pretty big decision and it's a lot of money at stake. Um, so when you work with me, of course, we go through kind of understanding what you're looking for and getting some, answering a lot of questions about, where you want to be, what your timeline is, what your budget is, all those kinds of things. And then there are documents that we have to sign in order to kind of start our working relationship together. And after this summer, there's actually legal ramifications to making sure that we actually do sign a buyer representation document, basically spelling out that we are going to work together, and that, it talks a little bit about compensation and how that works and who pays it and all of those things. But all of that has to be done before we ever go and actually see your first house that you want to go see. And the law now states that that is the case. So I'll explain all of that once we get to a point in which we're ready to work together and start that process. But it is important that, I share that that is actually, if someone tells you that that's not the law, then they're probably not as knowledgeable as they need to be, because it is now it is a part of our law that we have to kind of get that working relationship settled before we actually start the process of looking at homes. And then Finding the right lender is super important. So this is one of the reasons that I work with Selena Ward. She is incredible. We're friends outside of our work, but she truly does bring her very best to clients. And she's knowledgeable, she's flexible, she's able to work different kinds of loan programs. And it's not just black and white, if you have a W-2, then she can qualify you. And if not, then, go somewhere else. So she is extremely flexible and is able to really try to craft the right loan product for all of her clients. And she's also one to be very ready to educate. And she does consultations with all of her clients. So again, these are things, this class is not meant to be, you have to work with me, you have to work with Selena, but it is important for you to know that not all lenders, not all realtors work the same. And it's important to find the right people that you feel comfortable to get you through the process. Okay. So starting your home search. So one of the things that we do first in the home search process is after we know what your budget is. So actually, you actually start on that site first. You start with Selena and you get a pre-approval. But once you know what your budget is, then we talk and we determine kind of where you'd like to be and some other of those parameters or criteria. So maybe it's an area of town. Maybe it's within a certain school district. Maybe it's close to your job or close to a family member or, a very specific type of home that you're looking for. And then I set up a search for you on the multiple listing service, and then you'll get updates every couple of days of new properties that are matching that criteria. I also, working with Keller Williams, have an opportunity to search off-market properties, which is a great value add to my clients because not all realtors have this opportunity. And I work in an office that has about 650 agents. And so we've created what we call our private collection. And it is basically a whole nother MLS of sorts that has properties that are not currently on the market for everyone to see. So it's a great extra tool for us to use to just give some other options of homes that might be available to you. And we work directly with a realtor typically that would be in my brokerage office and go about it that way. But the nice thing about it is it's not as much competition possibly for everyone in the whole DFW Metroplex seeing those properties. So that's a really great tool and something that I can add that some other brokerages that are smaller or realtors just don't have those tools. So one of the things I also like to share is that, finding a home is not my primary job as your realtor. There are times, and lots of times, honestly, where a client will send me a link to a home that they found, and that ends up being the home that they purchase. So my job really comes in to the knowledge and education base of the whole process. Finding homes obviously is something that I assist with, and a lot of times I do find homes that my clients do end up moving forward with. But really, my expertise comes in strategizing and making sure that we're writing an offer that's going to be attractive to the seller, and then negotiating that offer and making sure that I'm getting my buyers the very best, deal in terms of the money that they're spending and the different value adds that we're asking for in an offer, and negotiating during that process, negotiating maybe repairs that come up and things like that. So that's where truly working with a great realtor is the most beneficial, is once you get to a point where you're ready to write an offer, because those strategies and that knowledge and that experience comes into play during that period and really throughout the whole transaction up until closing. Okay, this is a lot of words on this slide, but just a couple of things that I talk about in terms of strategy. So before we write an offer, I would do what's called a CMA, and that basically takes a property that you're interested in. We analyze it against the comparable properties that have sold within the last 90 days, and I make sure that that property is in fact worth what we're writing an offer on. So we want to make sure that if you're going to offer $350,000 on a house, we want to make sure that that house actually is valued at $350,000 because we would never want to offer and have you pay more than an appraiser is going to say that that home is worth. So I do run that report for every single property that we're thinking about making an offer on. I talked a little bit already about offer negotiations and just kind of making sure that, we are really getting the most value for you out of an offer. And knowing that price isn't always the only thing that we are negotiating. So, of course, sale price is an important part of that offer negotiation, but it's not the only thing. We're negotiating other things, maybe like who's going to pay the title policy, or is the seller going to pay for a home warranty for you, or potentially closing date, or are we offering a lease back or not offering a lease back to that seller? Things like homeowners association transfer fees. Those are other things that we kind of figure out like who's going to be responsible for paying those things, and how that will affect whether or not we're maybe strategizing an offer that we're writing because we're up against other buyers and we're trying to win. Or if we know that there aren't any other offers, and how are we getting the most out of what the seller is going to offer us? Um, the other thing that's really important is seller concessions. So a seller concession can be anything from the seller paying my compensation so that a buyer is not responsible for that. It can be a seller paying to buy your rate down, which I know Selena will talk just a tiny bit about. It can be a seller paying for some of those closing costs. Or eventually, as we work through negotiations with inspection, it can be a seller offering to pay for repairs and things like that. So there's lots of things that we can kind of ask a seller to pay for when it comes to seller concessions, and that's all part of the strategy of writing a great offer. Inspections, obviously, after you get under contract for a property, inspection is very, very important. And what happens after the inspection is we ask the seller to repair certain things or offer money in lieu of those repairs. So we work during that option period to negotiate some of those inspection items and make sure that either the seller is agreeing to pay for repairing the items that, we found to be concerning, or they're offering money in lieu of so that you as the buyer can take care of some of those things after closing. And then the final thing that I put on here is the closing disclosure guidance. That's going to be really just at the very end of the process. We get down to like we're ready to close in the next couple of days. I have educated myself to know that closing disclosure and to make sure that when I'm going through it with my clients, that everything on there is correct so that we don't get to the closing table and discover, oh my gosh, that's not really what we agreed upon during the process, or I thought the seller was going to be paying for this, and on here it says that I'm paying for it. So that's one of my things that I can bring as well, just to make sure that that closing disclosure and everything that's on there is correct, and that I can help explain it to you so that you feel good knowing that everything is in the right columns and is being paid for by the right party. So. Okay, so I talked a little bit about the inspection process. This is really a really important process throughout the transaction. So once you do make an offer and a seller accepts your offer and all the paperwork gets executed, in Texas, we have what's called the option period. And I know that in other states, it's a little bit different or called something different, but for us, it's called an option period. And it's usually anywhere between 5 to 10 days is kind of the normal that you're going to see. I would say 7 days is pretty average. And what it is basically an opportunity for you as a buyer to have 7 days to do some due diligence, to have an inspection done, to make sure that you do feel comfortable buying this property. And during that time, of course, that's when the inspections would happen. Once the inspection is complete, the inspector gives us the full report of everything that they've found, and then we write an amendment to the seller asking for specific things for them to repair. During that process, we go back and forth in negotiation, possibly a couple of times and it's usually myself and the listing agent that are, communicating on your behalf and asking, negotiating those repairs. And basically, by the end of that 7 day period, we just have to come to an agreement between all parties, all buyers and all sellers, of what the seller is agreeing to, have repaired, and making sure that you as the buyer are comfortable with whatever is decided upon. This is a really big one because we want to make sure that, we're really tackling the items that are going to be very costly or safety items. So that inspection report is going to be long, and it's going to have lots of things on it. It's going to be, 30 to 40 pages long. What I'm looking for as a, representative for my buyers is the things that are going to be big ticket items that are concerning because they cost a lot of money to repair in the future, or they cause other problems. They could be, indicators that other things are problems, or they're safety issues. And so we're going to focus on those things, and we're going to negotiate those things. And at the end of that 7 day period, as long as everybody is in agreement and everybody has signed off on that amendment, then we move forward into what's called the pending stage of the transaction. And that basically is where a lot of the loan work gets done and the appraisal gets done and things like that. So, all right. Oops. Went too far. Okay. All right. So this is one of my last slides. It just talks a little bit about what some of the upfront costs are for, once you find a home and you're ready to go under contract. The very first thing that you're going to want to kind of know as an upfront cost is earnest money. So the earnest money is typically 1% of the sale price of the home, although it is negotiable, but it's kind of a good marker for us to just be aware that that is typically, what you're going to find. So if you're buying a $400,000 home, your earnest money will be around $4,000. And it is due within 3 days of an executed contract, and it gets paid to the title company to hold in escrow for you. That money is essentially a deposit for you, so you actually get that money back toward your closing costs when you're ready to go to closing. So as long as everything moves forward to closing. The second fee is your option fee, and that's that option period that I just talked about with inspections. There is a small fee that we pay for in order to have that period of time to do those inspections, and that fee can be anywhere between $100 and $500. And it's basically the amount of money that is at risk for you. So we put on the contract whatever you feel comfortable with. The $100 is somewhat standard. And if during that 7 day period you decide that you are going to terminate the contract because you don't feel comfortable or we can't agree on the inspection items, then the only amount of money that you would be at risk of losing is that $100 during the option period. You would get your earnest money back, and then we would, of course, move on and find you another property. But that $100 would then get paid directly to the seller, kind of as a, sorry, we wasted your time. Here's $100 for that option period. If all goes well and you move forward to closing, that $100 goes as a deposit, just like the earnest money, and it goes towards your closing costs. The other two fees that you're going to want to be aware of is the cost of the inspection. So you do pay directly to the inspector to have that inspection done. And it can be, kind of anywhere between about $400 and $800, depending on the home size, the home age, and the extra add-ons that you might want the inspector to do. So they can do everything from an infrared camera to sprinkler inspections to termite inspections, all kinds of different things depending on the property and what you're interested in having them inspect. That amount of money goes directly again to the inspector and not into an escrow account. And then the final fee is going to be the cost of the appraisal. And that is something that the lender will collect from you when the appraisal is ordered. And that gets paid to the appraiser for completing the appraisal on the property. If you are getting a mortgage or a loan, there always does have to be an appraisal done. And the only time at which it wouldn't necessarily be mandatory would be if you're paying cash for that property. So that's when an appraisal is not necessary. And then the cost is typically around $450 to $600, depending on, the lender, the appraisal, all that kind of thing. So Selena actually can talk a little bit more about that, but that's going to be a little bit about the appraisal. And that's really my side of things. There's so much more to talk about, but I don't want to have you here for 4 hours today. So that is, the process of which kind of we would take when you get into the home buying process with me. And then this is my information. Most of you should have it, but I think I mentioned before, we're going to send this out at the end to everyone who registered so that everyone will have the information of the class and can actually watch the video back. So that is that. I'm going to stop sharing and then I'm going to make Selena our host. Let's see, participants. Or make a host. Okay, Selena is now our host, and then she can start sharing her screen for you all. And if anybody does have any questions, please feel free to put them in the chat, and then I can either stop Selena along the way or we can do them at the very end.
Thanks, India. So glad to have everybody. First of all, thank you for coming. Education is something you have to make room for in your life, and then you have to seek out professionals to help you. And that's what India and I do really, really well. There were just a few things that just made me beam for with pride on how well India works. And the fact that I get to work with her is always tremendous. I knew from the very beginning when I first met her that I really liked her. She's smart and she's always educating, and she even does education at that office of 600 plus agents to help other realtors as well. So thank you for that, India. There were a couple of things that you had mentioned, offers and negotiations. This is not in my class, but I wanted to touch on it because as we go through my class today, I think my portion of the class today, I think that you'll maybe better understand why being able to identify the terms and the new contracts that have come out and just the overall market condition and why it would be so important for you to know how to use these as tools to help your clients so you can better negotiate terms that are more favorable for you. So guess what, guys? It might seem like things are still really expensive, but my overall senses about mortgage and the real estate market is that really every day is a good day to buy a house. It really is true. I mean, the greatest wealth that you will ever make by 40 times versus being a renter would be to own your own home. So trying to catch the market at the right time, a lot of times means that usually something else may be going a little haywire, and then there's some opportunities on the other end. I always say, because I played basketball as a kid, that, it's kind of like double teaming somebody, right? On defense. Somebody's always open. So you're just looking for the open opportunity. And I've been doing this for a long, long time. I got into real estate when I was just a little baby. I was 19 years old and I started building, selling homes for D.R. Horton Homes right here in the North DFW area in Tarrant County. And I've watched this place explode. So it's been a lot of fun. I became a lender probably about 15 years ago now. And so I've kind of seen all these different markets since 2001. And my most favorite thing to do is to educate buyers. Sometimes we think first-time home buyers have to be really young buyers. Not necessarily. I talk to people in all walks of life. And I would say that if it's something that you're interested in and you're here today, like kudos to you for doing that. Also, things like understanding closing cost, seller concessions, maximum amounts that you can even negotiate in some of these terms. There's caps to all these things. India makes herself an expert at this, all the way down to saying, that she's making sure that that closing disclosure is right. I beam with pride because I'm India's lender a lot in transactions with our clients together. And the closing disclosure is my responsibility. But you see that you have a group of people that are taking responsibility to help you in a transaction that you would otherwise not know that you should be getting better service with this or having this type of information presented to you at all the right times. So we take this very serious. And so I just again wanted to thank you for being here. I do work at a company called Benchmark Mortgage. I've been here for almost 12 years. I'm here because this company was founded on a set of core values that I want to emulate every day, and that is success and relationship, dynamic excellence, and just an overall positive attitude. So you definitely get that here at Benchmark Mortgage. We're in 48 states. Our corporate office is in Plano, and I'm so thankful that our owner is a big part of our operations every day. So that's really neat. Okay, I'll get past that. You can find us on Google if you want to learn more about us. We do have a Google page and we have some awesome testimonies to some things that we've been able to do. And then also, India mentioned that we do a consultation. Well, the consultations are always free, but the consultations are catered to you. So they're catered to you so that you have an opportunity to really explore what your preferred budget is and then understand how you're going to be able to come up with the right plan that's comfortable for you in the right amount of time to be able to execute that plan. So the consultation is tailored to you with you in mind. In some ways you're kind of leading that conversation in that charge, and I'm just guiding you through to make sure that what you have set your sights on marries up to the home and to the sometimes the not only the sales price but also in the areas sometimes too. That's really going to make you certain that when you're out shopping, but also really gratified whenever you do close on your home that it's a comfortable payment and it has all the things that you needed. Okay, so it's a little bit more than just unlocking a door or just giving you a loan estimate. Okay, but we'll get to know each other better in the consultation. I do like to point out that there are a few people. Indy and I have a great relationship with each other. It's always stemmed from education. That's how we always kind of come together, and that would show in what we're doing here together with you today. But there are other relationships as well in every transaction. Okay, so I work with a lot of realtors, and there are a lot of lenders out there, but there's also a title company that's connected to every transaction. And there's a home inspector, and there's also you shopping for your homeowner's insurance. So I'm guiding you through these processes because these things show up at particular times, and you don't need to know all that. What would be better for you to know is that we're going to make sure that we guide you through who these folks are, how they're involved, and why you might be hearing from them throughout the process. Okay. Now, a title company is not going to come into effect until you go under contract. A home inspector is not going to happen, an inspection anyway, and that you're not going to carry insurance on a home that you are not under contract to buy or that you haven't obviously closed on. So some of these things come into play a little bit later. Okay. And then, of course, any negotiations or any talk with the seller is going to be through your real estate agent. So your buyer's agent, in this case, India Davis. Okay, so something I show a lot, and I feel like India has seen this like a million times, but this always just like really gets me, grabs a hold of me. There's kind of a lot going on here. So I just want to point out something important. Many people kind of feel like they're waiting for things to maybe come back down. Like the sales prices have been going up, 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 and that surely they're going to like turn and make a reversal. And so I think this is so interesting here. This grid over here on the right, where it's showing like all of, in all of history, the housing market and what equity has done. Okay. So equity, as you can see, has mostly been represented here as green. And you can see like it seems like it's always kind of going up. However, there were a couple of times to mention since, as early as 1942 on this specific data, that there have been two times where housing values went down. And because some of us remember what that time felt like in the economy, then we should probably speak into it a little bit and just kind of put some things at ease. Number one, we're not in a financial crisis like we were in 2008. Used to, you could get a mortgage by just telling me on your application what your income was, and I didn't have to validate that or verify that. I actually, believe it or not, was not even a lender during that time. I kind of came in right after that, at the tail end of that. So that's why education is so important to me because I felt like a lot of people just lacked being educated. There are a lot of new rules that have come out since 2010. One of them is the Dodd-Frank Act that says we have to validate income. We have to validate that it's likely to continue. So in some ways, some of the rules did tighten up, but that's been a long time in the making, and we're really really good with interpreting guidelines, understanding changes, and making sure that we know the products that are going to best represent your needs to make this process affordable for you without having to take you through confusing processes to get that information. Over here to the left, we can see exactly what was going on in 2008. We can see represented by the yellow bar here that we had a lot of homes that were completed. So we had a lot of inventory on the ground. Okay. And right now, so that was really good in the sense that it was a buyer's market. There was a lot of inventory on the ground. So buyers were getting, they were having a lot of opportunity to negotiate with sellers and things like that. That tends to happen when you have less buyers. So this blue right here represents the buyers. And really what this says is their household formations. So they're people that are coming out of renting maybe and they're buying. And we can see that that was substantially lower, almost half of what the demand would have been to purchase the homes that were on the market at that exact time. So we just had more homes, not enough buyers. So as we start to kind of look at what started to happen, maybe let's say I remember 2016, for example. I bought my house in 2016. So kind of remember the market and what was going on. But after that, we saw this huge shift. And what has happened is that we've had so many people now because of new generations starting to buy homes, and then people starting to see the value in owning their home, that now all of a sudden we have, and again, you can see household formations on the left and then completions on the right. We have now more families that need homes than we do buyers. Okay. So all of that's happening, and you might be asking yourself, like, how does that help you? Well, for a moment in time, when interest rates did indeed hit their all-time high, then people have pulled back and said, I don't know if buying a home is the right thing for me. And so only like at this particular time where India's been talking about things like negotiations and strategizing and things like this, do we see the true opportunity for buyers to be able to negotiate with sellers. So we're seeing like, yes, there was one time maybe in all of history where the home values went down. Guys, we don't think home values are going to go down. Okay, we feel like they're going to continue to go up, and that is because of the size of population that we now have and also entering into the market. Okay, so what you have is actually a built up amount of people that really want to buy. They do. They're telling themselves things like, the interest rate's so high and things are so high, so I'm going to wait until it gets better. And what ends up happening is that it really never gets better because home values just keep rising. So then when you look at having bought a house at 400,000 and with the projected 7% appreciation growth, which is pretty, I mean, that actually, that was my prediction last year. And I just listened to MBS Highway has a gentleman on there by the name of Barry Habib, and he's really, really good. India has listened to several of his things as I share them out throughout the year. But the prediction is 7% again. So this was right on the money. 7% over 5 years would be $161,000 in equity potential, wealth potential. So in 5 years versus renting and getting nothing for it, you could potentially have $161,000. And this is exactly why we're so passionate about what we do, because this is actually the client that we work with. Our sellers generally have $161,000 of equity. They have a lot of equity. Okay. So is this going to happen? Yes, it is. How do we know? Because it's already happening. It's been happening. This has pretty much been the consistent ride that buyers have been on. So we know that there's this huge potential. But one of the things, I want to go back, one of the things that causes kind of this huge like increase of equity and appreciation is multiple offers. So we do need to talk about multiple offers here for just a second. When you have too many people and not enough homes, and so naturally, you know that's going to drive the sales price up because of more competition. Competition is at its greatest when mortgage interest rates are at their lowest. Okay. So interest rates may be a little high right now, but you're marrying the house, not the rate. You can refinance the rate. You would be better when you have more equity and less competition to enter into this market. And that would be now because of interest rates. And just to show you some of the most extreme appreciation values that we've seen have been always when interest rates were at their lowest. So during COVID, interest rates were at their lowest. And look what happened. 10% appreciation in value in 1 year and 19% the next. This was in large part because of rates. And we saw the same thing. I remember I was selling at this particular time. I had not become a lender, but I remember exactly what was happening as we saw double-digit appreciation again early in the early 2000s. So guys, everything indicates that now is a great time to buy a house. And so we want to make sure that we kind of take the opportunity to take advantage of what we feel that we could maybe help you strategize to build, kind of put together the perfect plan now, while there is a little bit less, there's a little bit less confidence by sellers right now. And what I mean by that is that when your home's on the market for, it seems like 30 days is kind of that magical time where after 30 days, people start thinking they might want to reduce their sales price or maybe offer seller paid closing costs. Then what I would say is like you're really sitting at the right time to strike, because most people will say, well, I'm looking for rock bottom. I don't want to buy until this thing keeps coming down or it reverses and we hit rock bottom. So I've seen rock bottom before, because remember, I've been doing this for like 24 years in some capacity here. So it's like I've seen rock bottom. And the thing about rock bottom is you don't usually know that you've hit rock bottom until you're on the other side. And what is on the other side is a seller that is a lot more confident, a seller that has a lot more they have more offers and you have more competition, and so you find yourself having to forfeit things like in negotiations, like seller reducing their sales price or seller paying closing cost. Because if you were a seller and you had two offers competing against each other, people immediately start forfeiting, asking for things like seller paid closing cost or seller repairs or even price reductions. But right now, we're over here. We're on the side where the seller's a little bit more fearful, and because there's less competition in the market. So that's kind of what happens when people are, well, kind of going back to generations. A lot of sellers right now are baby boomers, and a lot of baby boomers are trying to get closer to their family. Indy and I have a family right now that we're serving. And, you know, things start to happen with your health and you start thinking, okay, this I can't maintain this particular home. I need to make a move. And they tend to be moving closer to family. And so you have a lot of that generation right now. Kind of makes sense when you think of their ages and they need to sell their home. And I always say this because it just seems too real to me is that people are always in a hurry around DFW. It's like maybe in other parts of outside of the city, they're okay if things sit on the market too high for too long or something. You see that a lot with land, right? Where it just kind of sits on the market. But around here, people usually have plans and they're thinking about where they're going next. And I think that's for everybody. And so if your home's sitting on the market a little too long or your neighbors are dropping their sales prices, India could tell you all of that. And that's when we know like that's a good time to start really presenting, not just carving out what our plan looks like. We kind of know that in the consultation, we're building that already. So now it's more like her being able to negotiate immediately with that seller before there's even another offer that can slip in. So I would say right now is the perfect time, just because of those opportunities that we're seeing. And so I would encourage anybody to jot down any questions that you have about what I just covered. I know that's a lot of information, but I am going to pivot a little bit here, and I'm going to talk about the major things that people oftentimes get tripped up in, or they just may have questions. I don't want to dig too deep into this, but these are things that obviously we're going to get to know and we're going to get to work on a more personal level for you. So your assets obviously are something that we're going to have to verify. So we need to know where the funds for closing would come from, and they can come from a few different places. They can come from your owned funds. They can come from a donor, a gift donor, or it could be a down payment assistance program. Or the seller can pay your closing cost. Okay, the seller can't pay your down payment, but there are also loan programs that we have that are 100% financing in some cases. Credit history is important. I'm going to dig into credit in just a second because I feel like people usually have the most questions about that, and I want to break that down a little bit for you. Debt, however, is something that I do feel people, I'm not sure what it is. I do. I think it's a guideline, and I think it's just that we don't slow down to explain to people why these sort of things get asked about people. But it's like, have you been working for 2 years? Not necessarily have you been working the same exact job for 2 years. Do you have a 2 year work history as an adult that you are that we can, show either through verification of employment or through college transcripts that you have 2 years of, employment history, that you have 2 years of employment history. So employment history is one of those things that people do ask, I just switched jobs, is that bad? I would say that the most important thing to know about employment is that it has to be verified. So if you're self-employed, it's still being verified. It's being verified through the IRS and your tax returns, or it's being verified through your employer. So we'll talk about that as it pertains specifically to you. I did miss a big one right in the middle, and I realized I did, and that was debt. Debt is a part of the equation because of something called debt to income ratio. Okay. And every loan does this a little bit differently. So obviously, that's what you need out of me. You need me to understand how to maneuver through these loan programs. But the debt to income ratio is also, because of the amount of programs that we have, can be a little bit flexible. And so we can usually find a good loan program for you. And then lastly, income. Income kind of goes back to employment. It has to be verified. This, remember, I told you in 2010 was a big change in the mortgage industry, and that was the Dodd-Frank Act. In that act, it clearly outlines the ability to repay, which is a law now. So, I mean, they really took this seriously. And so income has to be validated. Okay. So your debt to income ratio, sometimes that's something that people need a little bit of help with. Sometimes like just coming up with a plan of like, do I save money to buy a home, or do I use the money I'm saving to pay off debt? That comes up a lot. Sometimes you don't need to pay off debt to buy a home, but it might just be part of your perfect plan that we want to help you build. If that means that we set it out for, 6 to 12 months, India can help you get into a lease and help you really put that plan into motion, whatever it is. In some cases, people are ready to go right away. And so they will want to be the ones that are going for the pre-approval process just naturally because a listing agent's going to ask for a pre-approval. Like you're going to have a letter to submit an offer. So people just will go very quickly through this process, get a pre-approval, here's my letter. But what they don't know are things like what's my monthly payment? What's my cash to close? What other options might have been available to me? So these factors do show up in pre-approval, but in pre-approval process. But in any rate, we also like to make sure that we're offering this consultation process as a service to you, even before you decide if you're ready to get in the car and even look at homes in the first place. Okay, so we got to back it up just a little bit. So I actually do what's called like a pre-purchase consultation for you. And what that does is that allows us to pull the credit. We do a soft credit pull. We go ahead and we look at your debt to income ratio and we look at anything that we might need to be just kind of working on in advance to get you better prepared for when the right time is to maybe buy a house. Might be when your lease is up. It might be when there's a major change of employment or something is happening. But your timeline obviously matters to us. And so we're just here to kind of help you be ready when the time is right. Because people lose a lot of time in this part of the process, for sure. Okay, so I told you I would talk a little bit about credit. Um, credit is interesting, guys. There are over 50 different grading cards, 50 different grading cards. So what that means is like you could go and grab your credit score off different apps and different, value features from your credit card or your bank that might be like monitoring that. But there's three different credit bureaus and they do not talk to each other. And sometimes things only report on one or maybe two and not all three. So just in and of that can be a little bit confusing because some of those services that you're getting, those automated services that are telling you what your FICO score is, it's based on one of those three bureaus. So just the fact that we don't have all the information already makes it a little confusing. And then in addition to that, depending on what that line of credit is, for example, a credit card, a personal loan, a maybe an RV loan, maybe it could be an auto loan, or it could be a mortgage. I mean, you can see where there is a variety of different types of things that you could finance using your credit. Mortgage is different than all of them. In fact, that's why there's about 50 different grading cards, and not with mortgage. Mortgage has one. Our grading card is put out by Fannie Mae, okay? And they can make changes on this stuff all the time. You can kind of see sometimes where underwriting tightens up in certain times. One of the things would be like high utilization on a credit card. And you can see that the amount owed here at 30%, represented in red here, is a big chunk of your overall credit score. So of course that's weighted really heavily even in kind of the mortgage side. That's why I always want to offer you a pre-purchase consultation because it might be that you need to put a plan together to maybe pay off some debts to qualify. But in this case, it's a great way to actually get your credit score up. I saw a credit score yesterday that had no late pays on it. It had no derogatories at all. It was credit cards that had been opened that were beyond maxed out. So the utilization was over 100%. That credit score was a 630. Paying down those credit cards could probably get them maybe 80 points, 100 points, something like that, because there was no derogatory credit. So there's just a lot of weight right now that's being put into what your balances are versus what your limit is. And it may even be that you could ask for a credit extension and have your limit raised. So that way that gets that back in line for you. But obviously paying your payments on time is really, really big. So when when in mortgage, especially, it's like if you're currently behind on something, we need to get it caught up and we need to make sure that we build that into kind of the plan. But if you've had late pays in the past, it doesn't necessarily keep you from being able to get a great loan at a great rate. So don't be too worried about that. But these are just things that you can see. Like if your score is always hovering around a certain amount and you can't seem to break above it, it might be that some of these things have happened in the last, I would say, 2 years on a late pay has a lot of weight. So as things progress and we put the right plan together, we can really see that score come up. Okay, credit wants to go up, so they're just weights that are holding it down. And then how long you've had your credit open. Can I just say, like, if you were to pay off an account, if it's an auto loan, got it. That's an installment. That's what we call installment credit. It has a start and an end date. It's going to naturally close itself account or that close itself out. In terms of like credit card accounts, you would want to leave those cards open because as you can see, it's part of your overall credit grade. Okay. So you want to keep credit card accounts open. You want to have a mixture of types of loans. So people that generally have the best credit, or maybe someone that has like student loans that they're paying on because they're installment loans or like an auto loan. I'm not saying go out and get any of these things. I'm just saying like if you have credit cards, a great way to boost would be maybe to open up another line of credit and maybe something like an installment loan. I kind of tend to do this the opposite way, where I don't tell people to go finance things, but more so just open a line of credit to diversify. Because you might not have a solid credit score because you don't have any credit at all. Like you just don't have anything. Okay. But that's part of it as well. And then credit accumulation, opening new accounts. So I would say this really, really speaks to me as a lender that I'm seeing, again, you have a credit card and if it's maxed out or you are over that utilization, please pay that down. That's going to help you more than anything. Is the best advice I can give you because right here it says, new accumulation. If you opened a card in the last 12 to 18 months and it's setting maxed out, that's the best advice I can give you today in credit because it is 40% of your score and it will definitely help. We can start with the soft credit pool too. So that way we can kind of get a guide on how we want to go. We can build something out and then we can pull the credit after you've been able to make any of those little adjustments that I might see. Okay. And that often helps people a lot. So don't be afraid to ask questions after this class or even here in just a moment. If you want to set up an appointment, we can talk about that. Things to avoid after applying for a mortgage. So this is kind of those things where, now you have gone through the consultation and you're home shopping with India. There's a few things we don't want people to do at that point because we've already validated things. So we don't want things to change. So try to keep everything in one centralized bank. Don't, if you're self-employed and all your deposits go into one account, right before you buy a home is not a good time to like start a new business account and try to make it look a certain way. The way it is usually just fine. Okay. So try to keep everything kind of consistent with your assets. We can't use cash. Everything has to be validated. That's the Patriot Act after 9/11. All monies for real estate transactions for mortgages have to be validated and sourced. Okay. So if we're getting gift funds and stuff like that, part of the perfect plan, I'm going to help you know when the right time is to put money into your accounts. And so we can get time to get it seasoned. Don't apply for any new credit cards or any new lines of credit. Just because I've shared some things with you today does not mean that I want you to go do that right away. I'd rather get a snapshot of what your credit looks like and then see what the perfect plan is for you. And then I did mention cash already a little bit. There's the perfect time to put your assets into your account so that way we can have those 2 months anyway of bank statements that an underwriter is going to want to see without seeing large deposits in there. Again, I know I shared some credit stuff with you today. That doesn't mean that I want you to go open up a line of credit and co-sign on somebody just to build a score. Okay, so let's talk about that if that's something you're thinking about doing. This comes up with parents a lot. because they may be helping their kids take out student loans and things like that. So I get this question a lot. And then just don't make any large purchases. If you're not sure how your financial picture kind of marries up right now, that's okay. Like most people start, they all start here in the same place. But I would say, like, if you're not sure, wait to buy that car. So I kind of like just pump the brakes on any big purchases because it would be a good time to kind of get a financial snapshot of where you are today before adding that into the mix. Otherwise, my office is in Mid Cities or off Mid Cities Boulevard in North Richland Hills, anyway. And clients do oftentimes come here. We meet with people in person, and we also do a lot of Zoom calls with our clients as well. So if you are looking for a lender that will sit down and help craft a plan with you and for you, and just kind of be there to kind of help, you know, validate your process and before you embark on, you know, home shopping and negotiations and things that are going to be where India really picks up in this process. When India picks up, I'm here to support you, run numbers for you. I'll give you monthly payments, cash to close, and be part of anything that you need to feel good about submitting an offer. But really, India and I have to work together on your behalf. So when I mentioned the consultation, guys, it's a little bit more than just giving you a pre-approval letter. I'm actually kind of seeing where we might be able to save you some money. And right now, where I can help you save money is in your cash to close or by doing temporary interest rate buy downs and making the payment more affordable. So I understand that we have an opportunity to do that and it is working really, really well. But me helping you put a plan together, and this could be any lender, okay? I just feel like maybe we're a little deficient in this in our industry. In fact, kind of going back to India's point, um, 3/4 of loan officers that we had just 3 years ago have either gotten out of the business or they didn't renew their license yet. So they're a little bit behind. You're supposed to renew by the end of the year. And so we have a lot of people that are getting out of our industry. Truly, what makes us different is understanding that when one thing seems a little bit harder, something else makes it a little bit easier. And we can kind of turn the tides back to the buyer and put together the right plan that's going to feel good for you. And then at that point, I would be able to deliver with you back to India what that plan looks like. And then India is going to go to town on making sure that you're not overpaying on your offer and that you're asking the seller for very specific terms now for those seller paid closing costs. And, you know, in addition, the other things that she has to do. But just from the financial side, we really have to kind of fit together to wrap our arms around you and seal this in a way that you're going to feel good about, that's not going to have any surprises, or at least, if nothing else, get the consultation and now you have a plan for when the time is best. Timing is really, really everything. So no
I was going
pressure.
to say, I'm sorry to
Yeah.
cut you off, Selena, but I was going to say too, it's amazing to me when I'm working with other realtors that so many realtors are not aware of some of these loan programs, and also other lenders are not even suggesting some of these, rate buy down programs or seller paid closing cost programs. And it just shows you that there are a lot of people in this industry that they're just not as educated and just don't have a relationship, realtor to lender, where they're kind of a team and they're collaborating and they're working together for their client to get their client the best deal. So it is super important that you work with someone that really has their hands in this whole industry and understands what's available to you, because it could really save you a lot of money in the long run and also get you the home that you're looking for, because we're working strategically together.
Yeah, and that's really, guys, where I wanted to kind of park it because your roadmap is your roadmap. So we got a few things that we want to start by unpacking, and that is, where do you see yourself in all of this? Is this something that really interests you to buy and own your home? Or is it something that somebody you know has been really talking about doing for a long time? everybody starts in the same place, and that's just getting educated. It does take some vulnerability, so who you work with really matters. It's your money, and it's a huge purchase. It's a huge transaction, and so we take that seriously. But you know, I appreciate these types of opportunities to get on and do something like this with a realtor. And then, of course, in doing so, I have to say that India is one of the very few realtors that actually do things like this. So to have her time on a Saturday where she's making herself available just tells you that these are the things that we would do for anyone one-on-one or in a group. So don't hesitate to ask questions. Um, does anybody have any questions so far? Like, is there anything that anybody wrote down? And this is not a huge group. So you might find that unmuting yourselves might help other people with any questions they might have or answer a question. So you don't have to, but does anybody have any questions?
Because this is Nancy. Because I am now driving, I am the driver. I had to do something with my in-laws, so now I'm a driver. I don't have any questions, but I'll be at this time. But I will be writing to you, India, and with a slew of questions that I do have, but I just can't articulate them. I want to give myself an opportunity to think about them and articulate them
Absolutely.
correctly.
Absolutely. Well, we
Thanks.
don't want you to be unsafe on the road either. So certainly,
No.
whatever you think of, and like I said, I'm going to be sending out this recording to everyone who was here. So if you need to watch it back and just get to a certain point of something Selena said or something I said and go, okay, I don't really understand or I have questions on that, then of course we are available for you to, email, text, call us at any point to ask questions. So this is the beginning of a relationship, and you can feel free
Yeah.
to certainly, ask us any questions you need to. So thank you
Okay.
so
Yeah.
much for being
Absolutely.
here and for listening, Nancy. We appreciate
Yeah,
Yeah. I'm
thanks,
still gonna.
Nancy.
Yeah, you bet. I'm still gonna listen, but I'm just not going to be actively participating.
it. Sure. Thank you.
Okay.
We have a couple of other folks that are on. Does anybody want to unmute? You can ask the silliest question or
Uh,
it doesn't it
Hi,
doesn't
Selena. I always have a lot of questions, so I've got a
good.
couple that are probably pretty common. But I'm just kind of figuring out here is where kind of newer, obviously, is how do you determine the max price of a home that you can afford for your like first home?
So that really drills down into like the pre-approval and consultation. Again, getting a pre-approval letter is like the golden ticket to Hollywood, right? But when you get there, you have no idea what you're in for. So you really need the education piece of it. And that's what the consultation is. It's 100% education. One of the questions that I always ask my clients up front is, what is your desired monthly payment? How much would you feel that you would want to saved and have available if needed for a real estate purchase? That's just, kind of getting familiar with where you are, what number did you have in mind? I really try to tailor fit a program to you. And right now, the biggest benefit that I can provide is showing you how to keep more money in your pocket, you know. So that budget is everything. To us because you shouldn't feel that you need to max yourself out unless there would just be like a really good reason to do that. So most of the time we're trying to just help people feel good about the purchase and that comes I think with financial certainty.
Yeah, and Josh, to answer your question, Selena obviously takes into account your credit score, your income, your other assets, and your debts, and all of that works into kind of, into her system so that she's able to determine like the max approval that she could give you. And then from there, kind of what we talked about when we met, that doesn't always mean that that's the price that you want to purchase at because maybe the payment at that max approval isn't what you're comfortable with. But she uses all of those things from your employment, your what you have in the bank saved up, your credit scores, your debts, things like that. And that'll give her the max number. And then you'll determine from there what your comfort number is and what you want to, what you feel comfortable in terms of what we're looking at in terms of our price range.
That's probably the number one question, I would say. And to be able to articulate it, sometimes people are like, when I say that to them, like, would it be helpful if you kind of knew what sales price you needed to enter in at based on your preferred budget? They would be like, yes, because if you're online and you're Googling and looking at properties and they're taking you to these calculators, they're not right. I'm so sorry to tell you that. What they're doing is they're capturing your information when you click on it, and then they're probably feeding it back to people that buy your name and your phone number or whatever information they can get as a lead, which is not what India does. So you might find that you get a barrage of calls. And the thing is that sometimes too much information by people you don't know or they haven't been verified can be confusing. So I feel like we go to the internet a lot, but it doesn't really validate what we think we know. So sitting down and moving numbers is really kind of the fine tune to make sure that it's your budget, right? I'll tell you the max you qualify for, and then we can. And sometimes, guys, if there's a disconnect, okay, there not sometimes, most of the time there's a disconnect, okay, because we might be looking at something that is not the payment that you want. And we want to know that before you fall in love with anything. We don't have surprises here. So by the time we get down to that closing disclosure at the end, everybody's happy because it's the same number that they pretty much saw at the very beginning. That was a good question. And you said you have lots of questions. So do you
I
have
always
any?
have a lot of questions. It's more just like, especially with something like a big boy purchase for us, like I gotta have a general understanding of everything that, we're getting ourselves into. So yeah, thank you for answering that. I'm just if we're looking to the side, we're taking notes here. So
Good.
so my next question is I'm sure this has to do with the pre-approval and consultation because it seems that kind of determines a lot of different things, which is understandable. But kind of going from there is depending on how that pre-approval goes, is how do you kind of know which loan types that are best for you? So like an FHA or a conventional loan, the DSCR, is that kind of depend on what you get approved for?
Yeah. So before I even do the consultation, you're already pre-underwritten with me. So I would have already had all the loans. I don't ever speak about loan programs with people like in terms of what their payment might be unless I really have an application and get you fully pre-approved because debt to income ratio, down payment, and then some of the programs, all of it will generate different interest rates and different cost. So we want to make sure that we are drilling down on that. That's my expertise in it. You know, there are a few loan programs that everyone tends to kind of be familiar with, and one is conventional, one is FHA. If you're a veteran, you probably know about your VA home loan benefit. Down payment assistance programs pair up with those programs. So now you start layering programs together. I mean, I really do have to interact with you with so much more than just having you fill out an application because these questions, as we get to know each other and we break them down, are going to drive a lot of kind of where I'm taking you in these programs. It can take hours to put an application together. It could take days to get or weeks to get the right documentation sometimes.
For sure.
But it can work every time just off proper preparation. But I think we're going to discover a lot of things just on our initial call with each other. And then we're going to be able to say, okay, this seems like the best fit. I have reasons why, and usually always because of affordability, that I might put a client in one program over the other. Okay, but I'll be able to demonstrate that benefit to you. So I'll show you that in some breakdowns and calculations.
Sorry, it wouldn't let me unmute. Yeah, no, that makes sense. Thanks. I'd be interested in obviously scheduling one after all this. Our other question is kind of plays into this as well. Is we know you have a lot of perks for being a first homeowner, like buyer. I don't know everything off the top of my head, but I know you have some. So we didn't know if this is a dumb question or not, but we're not married yet. So we were wondering, let's say one of us gets a place, they use kind of their perks and it's under their name, and we're not married yet. Once we are married, do you kind of lose the rights of that if we were to get another home under my name? I don't know if that question like makes sense.
The, the perks are, let me first say this, that anyone that has not owned a home in 3 years is a first-time home buyer. So there's not a lot of emphasis on it, as you might think.
Based on who's on the title.
Although it
I'm
is a
not on
great,
my title.
it is sometimes it does tug at the heartstring of a seller that, you know, you're a first-time home buyer or something like that, or there are some down payment assistance programs that, and rather than putting 5% down, then you only have to put 3% down.
I'm educated.
Or there might be a reduced cost in things like mortgage insurance, but it's not a better interest rate. There's not a better rate available for a first-time home buyer. But there are some things that could be a little bit better in monthly cost if you don't make too much. So all of these things end up capping you way down here. And so the bucket's a little bit small. We'll look at all of it. I'm thinking Home Ready, Home Possible, Fannie, Freddie. I'm thinking T-Shack, Texas State Affordable Home Corporation. These over here that I mentioned, they have lower costs. Then you start getting into things like first-time home buyer down payment assistance programs, and you may find that you don't like the interest rates to them. So are there programs? Yes. But are you going to like them?
I think that answered my question.
Yeah.
It's okay.
But it's okay because no matter
No,
if
it's
you're a
okay. I know.
first-time home buyer or not,
No, I know.
yeah, now you know. And I mean, I do think that I think it's very commendable, actually, as a first-time home buyer, that you would spend time getting educated like this. And I would also say that a lot of people your age do the same thing. They actually come in a lot. So very good. Kudos to you. When I bought my first house, I didn't understand anything. I bought my second house. I bought an investment property. I still didn't understand. By the third one, I was like, not again. Like I'm getting myself a loan officer. I'm never, because nobody would explain anything to me. So
Okay.
I didn't really understand. And so good for you for doing that. And then I'm not suggesting that we don't look at all of those features, or that there is a that is a feature as a first-time home buyer, because in some of these programs you have to qualify for that. So we will look at them. I just don't want you to feel like you're shooting yourself in the foot, or you need to do something for some kind of benefit that it's just not all that big of a benefit, unfortunately. And it does apply to a lot of people. Anyone that I have a client right now that I helped finance a home, but he sold it in 2021 and now he's back buying again. So
Cool. No, that's a similar path that we're kind of looking into as well. Just because we're in the age of kind of more of a passive income and kind of building up, you know, profits for yourself in the future. And we do want to look into something like a 1031 exchange if possible. So that's kind of why we were asking that. And just to clarify, so if the title's under, let's say, Emily's name and we get a home, and everything like goes well, and let's say we're married by then, because I mean we're not even engaged yet, but like it's on the rise this year. So
is it on your vision board this year?
yes, it is. So it is on the vision board. But we just want to know if we were coming back to you, every, let's say 3 years, just like that. And I want to get the next home and I put my title under that I didn't know if that like messed with anything.
Or counts as a first-time home buyer.
No, really, guys, the best way to do this sort of thing is make it your primary. I can show you, make it your primary, live in it 2 years. I'm not suggesting you have to. You don't have to. Okay.
That's what we want to do, actually. So we're on the same page.
Yeah, because of capital gains. So like the law says, the tax law says that if you have lived in that home for 2 of 5 years, so say that you live in it for 2 years, you own it for 3 years. If you sell it before the end of the 5th year, you don't pay capital gain taxes on it. So that's the only thing, is like, it's so much easier to buy your primary home and convert it because you don't have to finance it as a rental property. You can keep the same loan on it.
Huh. Okay. That's what I thought. Um, I just like clarifying because so my
So
dad's
good.
right here. He worked with India and in the home we're currently in right now, actually. So he tells me stuff sometimes, but I just like need to hear it from someone who's got the title of like no, I just like it's weird, you know? It's like
It's your field.
it's your field of expertise.
You don't like to
Yeah,
listen to your
it's
dad, is what you're
No,
saying.
that's not what I'm
Josh.
saying.
I did learn a lot of my stuff from India. So
That's so good. That's awesome. So yeah, I mean, all of that is really, really good. And if you want to think about real estate in a way where you can build wealth and you can leverage and you can get to a place of passive income, then just know this is a journey that you're going on, right? And so having people like India is really, really a smart idea because as the market moves, we're oftentimes so tip of the spear that we're telling you things that I know that's not what the general population thinks. I know that we're kind of trying to overcome some, and that's why I show you the statistics and I show you these things so that it's not just my words, but it's like this is what's really happening. And it's going to continue to happen as the next generation, as 8% of them are already buying. And in addition to the millennials, and I think we need a lot more houses and we don't have them. So this is kind of the time you're in. You're going to make a lot of money on real estate. That's what's going to happen. And your dad's shaking his head because I'm a parent too. Hi, Dad. And I let's just do the first thing first. In my opinion, first block is get that in. Just own the home that you live in. Like do that. You'll figure out the rental stuff. It's all in timing, but keeping your eyes open and looking for things. And a lot of people get into real estate because it's a hobby for them. You
Yeah.
know.
Yeah, and we
And
want to turn into that too, just because I don't know. I just see it all over social media. We've been kind of just looking into it the past couple of years and learning a lot about it and learning, yeah, like listening to podcasts in our free time about all that. So kind of switching our college phase into a more serious phase right now and just educating ourselves on all this information too. So we can
look up cost segregation.
that's what I was telling him yesterday. The cost
Yeah.
segregation.
Yeah, look up.
I don't think he
Is
quite.
that dumb to ask what exactly that is?
yeah, what is that? I mean, what we could look it up.
I can look up like a rough overview.
Yeah, sure. No, I'll tell you. I'll tell you what it is. It's so
Cost.
on your taxes when you're a landlord, on your taxes you file a Schedule E
Mhm.
and for Echo, and you can do write-offs in there as a homeowner, and makes you now a business owner because you're a landlord, and this is supposed to be on your tax returns and when you file. So what cost segregation does is it allows you to take a depreciation rather than just like writing off all your expenses. You can actually take kind of a depreciation, and by doing that, it can save you a lot on your taxes.
Oh, okay.
Depreciating the property. Yeah,
Gotcha.
it's a process of depreciating things like the carpet and the cabinets and the countertops and the faucets that over
That's what I was
27 and a
asking
half
about.
years, all of these things would need to be replaced maybe at some time or something. So it comes from
Huh.
usually a CPA. Not all CPAs, only a handful of CPAs know how to do it. But cost segregation is usually referred out by a CPA to a CPA that specializes in it.
That would
So,
make sense.
and Ed Allen is my CPA. He does cost segregation out of Keller, Texas.
Cool.
Perfect.
But now that's one of those things where like you're a W-2 employee and you can't write off any of your expenses. That's me. I'm a W-2 employee. I can't write off any of my expenses, but we're here. I got this. I got
Mhm.
things, got cost to do business. So for me, it was investing in real estate. So that way I could have some write-offs. I could write off some things. That helps me out. And I think that since you do like looking things up, if you can wrap your head around that, I think you'll really enjoy that.
So would it make sense for them also, even to have that consultation with you, just so like you can help? Because I remember India when when I first we talked to her, and she's like, "Oh, you gotta pay maybe this down to get your, score up better, and to a point where then you can get kind of a max for a better rate and things like that." So like now is a good time to do it because then they have, like you said, it takes time to do some of that credit stuff and with the suggestions. And so but so then they can fix whatever you help them suggest. This is for everyone, not just them. So
I agree. No, I completely agree. Look, it's never too early. It really is never too early. If anything, I feel like it's a little too late for people because they're like, oh, my apartment's going to renew, and all of these emotions. Like, let's take the emotion out of it and just look at what we're working with, see ways that we can enhance what we have to maybe point us to a better outcome. But I think people either think one, they're not going to qualify, or two, I know I already do. And either way, they just kind of don't get started.
yeah,
So I have clients that I'm working on for over a year. Most of the time, I just closed a deal, or it's closing on Monday actually. That I worked with her 3 years ago, and she couldn't buy. So, like she's back and she just bought a house, and she literally called me and said, I got the house, and I want to close in 30 days. And she was ready because she had a plan. Isn't that incredible? Like she remembered the plan and she'd been working on it. And so when she came back, everything was great. I'm so proud of her to be able to buy her first house by herself. That's hard sometimes for people
yeah,
to, but anyone can do it, I think, with the right education and the right plan.
yeah. I think that's probably the best thing is the plan, because I think for us, it was well, here are all your options, and then you can kind of decide which way you want to go. Maybe you have the money for a down payment for the 20%, but then you get all these other options, and you figure that, hell, maybe I could just put this percentage down and save my money for some other thing. It all depends on your budget and everything and what you can handle. But I think that would be good for them.
And kudos to you guys for looking stuff up, asking questions, taking it to dad, getting on this call. And you've got India, she's your neighborhood agent. She knows everything about where to go to get the information. If you can't find it, like she'll find it for you. She's
Yes,
relentless.
yes, she will.
Perfect.
Starting early is so great. I mean, I think it's amazing for you guys to just start exploring this, get on, schedule something with Selena and just get some ideas of where you're at as a starting place. And then that might be good. You might be ready and you'll know that. Or you might have other desires. And so you're like, okay, well, we want to get to this point and we're here right now. So we're going to need to do X, Y, and Z to get there. And that's always good. I always tell people it's never a bad time to at least get on a call with Selena and just find that out and kind of understand where you're at today. And if it's not where you want to be, then she can give you all the tools to let you know how to get there. And then
Yeah.
you'll be 100% ready when the timeline is right for you to start actually like putting in offers and seeing homes and things like that.
Okay.
Yeah, and just from the side of like having been a realtor many years ago and being a lender for so long, I kind of feel like people that don't start early there's too much emotion. Buying a house is emotional. It just is. Like it just is you're just gonna swell up with pride because you've done all these things that were challenging to get to this point where you could be able to even afford to do this. So, I feel like you get to enjoy that when you have financial certainty. When you don't have financial certainty, it just feels like it's not the same experience, especially for a first-time home buyer, because you don't have anything to base this on. So if you've heard people say like it was a terrible experience or like, we don't have that. Like we don't have unhappy people. Everybody, you can go and look at our reviews. Like people leave reviews and they keep coming back. So I just feel like that we are better in the industry by getting you going with all this information, and then you take advantage of it when you want it. So no pressure at all. I mentioned that before, but you have my QR code right here. If you just click on that, then it'll take you to the application. But there's my number, and I don't think I'm sharing anymore, but let's see, can I share?
Screenshot that. Because you can.
I think
scan.
you are still sharing, Selena.
Okay, good. Good. Okay. Well, then there you go. So now you have it, and we'll start with a soft credit pull. If you're not really ready to do something right away, we might just start with a soft pull. But I can do a lot with that information, and it'll be fun. I'm so excited. Good job for, like I said, taking the time, but congratulations on making up your mind that this is what you want for your future.
Yeah, no, thank you. We appreciate all the information today. Obviously, we know absolutely probably nothing coming into the call. Like we had ideas, but just clarifying information is great. We also would like to, help you guys out too. Like Emily and I are really big networkers, so whatever we can do to help you guys on your end. And like
Yeah,
we're really big on giving
this
back
guy
to people.
networks like mad. Like he,
That's amazing. We always love referrals. Selena and I, we build our business on referrals. So that's huge for us. And the same goes for me. I like to give back to y'all. And I know, you've got your company and just the partnership, and that's huge in this industry. And I know with Selena as well, just, kind of referring back and forth is how we build our business and how we build happy customers and happy clients. So we love that. And we will
Perfect.
accept anyone that you want to send our way.
And
Yeah.
if you have cool ideas too, like I'm all ears. Like when you're a people person and we are networkers, like big time networkers. In fact, my husband is a veteran, and so I do a lot with the VA stuff. And it's a community of people that just raise each other up. So whatever you're doing, like I'm interested in knowing about it. I think that's cool. But that's a kind of offline. But I mean, like India said, when it ebbs and flows and we're pouring back into you, we just need to know more about what each other is doing.
Yeah.
And that's super
Yeah.
awesome.
Like you said, I want to make it our lifestyle too, not just a job where you're coming to us and working like that. So yeah, I would love to connect after this. We could schedule a call. And we do have a lot of people interested in the similar things we're doing. That's why Emily's best friend's on this call too. And she lives in Frisco.
and they have all their friends coming and
Yeah, we have like 5
convince
people.
them to move to Texas.
There's like
Love
5
it.
people
Yay.
coming down
Bring
here.
them on.
Get out of the Midwest.
Yeah. But they're interested in doing the same things as us. So like we'd even maybe schedule a separate call with just our group, and that way everyone can kind of feel, comfortable and ask questions and kind of learn everything together at the same time.
That is huge. That was the whole point in doing it like this. You only go so deep in these types of trainings because you don't want to overwhelm people, but on a granular level, you can get a lot of questions answered just by sticking around afterwards or planning something like that for your friends.
Perfect. Yep. Let's talk, and I'll get that scheduled because there's about like probably 8 of us. And we can kind of go from there. And I'd love to have a separate culture, Emily and I, and even you in India. We can kind of figure everything out, kind of learn about each other and how we can help each other.
Yeah.
That's incredible.
That's
What a
perfect.
great gift. Thank you.
Yeah,
Appreciate
of course.
Well,
But we
thank
don't want
you
to
guys
take up too much
so
more of your
much. Yeah, I
time
was
here.
just going to kind of
So-
wrap up and just say thank you to everyone who's here. I know Nancy's still driving, and Emily, and y'all. Thank you guys so much for being here and for asking such great questions and participating. We love doing this type of thing, and so we're gonna continue it. And if we want to do kind of a whole group of your friends and your group that are kind of all like-minded and wanting to do the same thing, I'm happy to do that again, either in person or on Zoom, whatever works best for everybody. So I'm going to kind of wrap up and stop the recording now, but thank you so much again for